Now, foreign investors are really interested in Australia because they think Australia has the money for a public infrastructure boom. And I'd like to read a quote from Tony Shepherd about that proposed boom. As a construction boom associated with a resources boom tails off, infrastructure can sensibly fill the gap. So there is this thinking out there within the business community in Australia that we can have an infrastructure boom, that foreign investment can be invested in it, and that all these assets like hospitals are going to be built, not because of the health needs of the people of this nation, but in order to make money for these corporations, and also to continue the current boom, because there's been a boom in construction associated with the mining industry. So we're really seeing that health policy is going to be severely impacted by the force of money invested in health infrastructure, but not for the purposes of providing the kind of targeted and necessary health care that people in this country need. These foreign corporations, transnationals, also see Australia's superannuation reserves as a honeypot. May I quote from a report from a company called State Street. Australia's superannuation reserves are the fourth largest pool of assets in the world, which is completely disproportionate to the size of the Australian population. The big opportunity and the strategic imperative for the organisation is really servicing the superannuation sector, which is growing at 12% per annum. So it is absolutely essential that we are here. Now, State Street is a Boston-based transnational who specialise in managing assets, and their assets under their control amount to between $800 million and $1 trillion. And in some of the information that I've received, I've actually seen figures that are higher, but let's just put it at 800 million, which is a conservative figure. So just one company has enormous power and sway economically. Now, in health, they certainly think that Australians can pay more for healthcare. Americans actually pay twice as much for their healthcare. Healthcare in the States takes over 16% of gross domestic product, whereas in Australia it takes 9.6% of our gross domestic product. We also get a much bigger bang for our buck. The life expectancy in Australia is 81.6 years. In the United States, it's 78 years. And that figure is actually a little bit screwiffed in a way, because the United States has the richest people in the world and most of the rich people in the world. And those people can afford excellent health care and the kind of lifestyle that enables one to stay healthy and have a good life. So when you look at the life expectancy of Americans on much lower incomes, you're actually looking at 74 years. And that's, of course, well below Australia's national average of 81 years. The thinking in terms of business is seeing Australia as very attractive for investing in health and ageing, and they call that a favourable macro trend, because the macro trend is in fact privatisation of Australia's health assets and under-penetration of many private healthcare offerings. In other words, that's a rather crude way of saying that there's not that many private hospitals in Australia that the market could be greatly expanded. And this is actually what's happening. And we certainly see that here in the Illawarra, with now at least 6 proposals for major private hospitals on the table. Also, in a report that came out in 2008, Kevin Rudd established the Health and Hospitals Reform Commission in 2008 in order to foster privatisation of our healthcare system. And one of the submissions in that report was from Healthcare Villages International, who set up private urgent care centres which are replacing emergency departments in Australia's hospitals. And they stated in their submission to the Commission, the healthcare market is a multi-trillion-dollar global growth industry. So these guys are very much focused on making a huge amount of money at turning our public health sector into a private health sector. So who in our society are making these decisions? Well, when we look at the Foreign Investment Review Board, we can see where the people on the board, who they represent. There's people coming from the executive arm of government and also from business. These particular companies, SAI, Magellan and Bell, are all companies that are associated with providing business intelligence to companies who wish to establish their businesses here in Australia. So they provide business intelligence and compliance services, etc. Now, if there's going to be this massive infrastructure boom, and if a lot of foreign investment is going to come into Australia to finance it, along with the financing of it from our superannuation funds, what is the financing structure going to be for infrastructure? So what I would like to do is talk about a report from a company called Pottinger. Again, it's a financial services company. Their statement in their report called The Keys to the Nation, Australia needs to find new ways to match the substantial volume of consumer savings in the superannuation sector with the demand from infrastructure projects and mortgage lenders for investment capital. Now, as you can see, Kim Day, you know Kimmy, Kath's daughter, obviously got the opportunity to design the cover of Pottinger's report, replete with many, many Easter eggs. So they clearly see that it's going to be raining Easter eggs if they get the keys to the nation, which they basically already have. So the Business Council of Australia said that as the construction boom associated with the resources boom tails off, infrastructure can sensibly fill the gap. So the Business Council of Australia is very keen to see this infrastructure boom, and it's going to be financed from foreign investment. And there's a new model for building infrastructure. This model looks at government, which is going to build the infrastructure like new hospitals. So it's going to be government money, and the profit from this will go to private contractors. The risk will be carried by the government, i.e. you and me, the taxpayers of this country. Once the infrastructure is built, the government's going to sell that infrastructure to super funds. So again, it's citizens' money, because we have a mandatory superannuation scheme in this country, so anyone who's working is putting money into superannuation. There will be profits of sale, and the risk again is going to be carried by you and me who've got superannuation. Then the government will sell off to private companies who will then manage and operate these public assets that have now become private assets. So there will be, citizens will be paying again because there will be patient client money going into paying for these assets. Again, the profits will be going to private corporations. There'll be private investors and the super funds. So the risk is going to be underwritten by the superannuation funds, which is you and me. I just draw up an example of how this is going to work. You've got state governments who will be converting infrastructure bonds to investors, like superannuation funds. The Commonwealth Government is going to pay interest on the bonds. The private enterprise will do all the building, the construction, and once the construction is finished, these bonds will convert to shares. So investors now own the hospital. Contractors will operate the hospital, people like Serco and Spotless, and in the future, if there's too much of a political uproar because the taxpayers are paying too much, both through their tax and also through other means such as health insurance, etc., the government may well buy the assets back. And in this model, the government buyback of assets is an option within the model. Now, this is the model from Pottinger, and the president of the BCA said that government should sell infrastructure they don't need to own and use the funds to partner with the private sector to provide new infrastructure. In other words, the Business Council of Australia wants the government to raise money by selling assets. Then they've got cheap capital to invest in new infrastructure, which they may even end up buying back. Now, this has already happened in Port Macquarie. The public hospital there was sold to Main Nicholas, and the government ended up buying it back, which means that the taxpayer actually paid for it twice. And this basically is the model that's being proposed. This model is open to waste because there is no incentive to curtail costs, and it's also open to corruption because there's all these incentives for private parties to do deals with superannuation funds, with government employees and executives of corporations. So it's a rather heady mix, which is going to be very, very difficult for any prudential organisation to oversee. Why have I put so much emphasis on the Pottinger model? Well, the reason is that they are a key advisory company to government and private enterprise, and they have advised the government on public-private partnerships and infrastructure. And also John Mulcahy, who is on the board of the Future Fund, which is the fund that looks after the superannuation of the federal government public service, is also an advisor to Pottinger. So you have very, very clear, distinct links here between the private enterprise and government and superannuation. He's also chair of the mining consultancy company Coffee, and he's also on the board of the developer Mirvac. So he's very, very well placed to advise and influence. Now, in order for this infrastructure development to really take off in Australia, it has to go through government procurement system. And the government procurement system, which I've called Pipeline to Profits, so it's another PPP if you like. Business wants an infrastructure boom. They want to build railways, roads like WestConnect, they want to build ports, they want to build hospitals, airports, schools, etc. Whatever they can build, they want to build it. So to make this happen, government procurement policy has to be the right fit, and it is. Back to the Department of Finance and Deregulation, they put out a document called the Commonwealth Procurement Rules. And in these rules, they have a few very, very key statements. Firstly, that there can be no discrimination against any companies based overseas, be they affiliated with foreign-owned companies located or of origin, or whether the goods and services actually come from overseas. In other words, there is no buy Australian bias here. Any transnational corporation or foreign company located in other countries can actually tender for Commonwealth government procurement contracts. The other key issues that you will see in the rules is the fact that there are some clauses in it that give some loopholes. Firstly, in reporting of contracts, and secondly, in regards to the taking of risk. There's a really interesting statement in regards to risk. It says agencies should generally not accept risk which another party is better placed to manage. Where an agency is best placed to manage a particular risk, it should not seek to inappropriately transfer that risk to the supplier. In other words, it's 6 of one and half a dozen of the other. The government may or may not take on the risk of these procurement processes. So the loopholes are established for this particular kind of process to go on and support this infrastructure boom in Australia. Procurement has certainly evolved in recent times, particularly since about 2005. And this evolving of procurement has been to invite the private sector in, and it's called the public-private partnership model. Government procurement of infrastructure projects has been radically transformed by this model and its variants. And it's been devised by public servants in partnership with corporations. It's got distinctive features, is its reliance on private equity. And it really took off in about 2008 with the establishment of the federal government agency called Infrastructure Australia. Now, my great concern about infrastructure is not that the government wants to build it, because we clearly need infrastructure in this country. We need hospitals, and we need roads, and railways, and ports, etc. It is the financial model for actually building the infrastructure and a regulatory model for managing it, and the participatory model, like the community is not involved in developing this infrastructure boom and the management of it at all. And this is what is a grave concern, because when the executive arm of government and business get together, they are really going to have this infrastructure boom to satisfy their own concerns and needs, and not those of the community. The federal and state governments evolved the infrastructure model that's in place with a lobby group called Infrastructure Partnerships Australia. Now, as I mentioned, the federal agency is Infrastructure Australia, and in all states of Australia, including New South Wales, there's also state agencies, and in New South Wales, that's Infrastructure New South Wales. And in one of their most recent reports, they state, establishing a pipeline of projects to enable private sector involvement. So they really want to have the pipeline for private infra.